Alright, hello traders. Welcome to the free video. Let's get into the market update. It is Sunday night, August 13th, and here we are looking at a chart of the VIX. So, looking at the spot VIX here, we're running right into some overhead resistance right at 16. Every time we've had a recent pop, we seem to approach that 15, 16 level, and then we have a quick sell-off. If we're looking at the other or sell-off in the VIX, I should say. If we look at the recent spikes in the VIX, obviously we haven't had a huge market correction yet, so every time we kind of spike up, we tend to retrace these moving averages. So I'm looking at the 50, 200, and 100 moving average. So I think we start trading back VIX 12 handle and looking at volatility products because I know traders love them, but I always try to discourage trading VXX. Because, even though we had that huge move in the spot VIX, if we look at VXX, narrow down, we went from 11 to about 14. Not a huge move compared to the spot VIX. If we also look at the leverage product UVXY, we did have a larger move there. We went from 30 to 43. So actually buying out of the money call options would have worked in that instance because of the VIX futures. It's looking at the leverage VIX future contract. So we look at the VIX futures here. Remember, $1,000 per point per contract. And we had a run up here in the VIX futures. Again, right into some overhead around that 16 mark. So looking at that, we need to look at the indexes. Let's look at the SPY. If I look at all these moving averages, 50, 100, 200, everything's still confirming an uptrend. Every time we've retraced back to the 50, we've bounced and the markets have grinded higher. Even when we've broken, maybe a couple days as a break, we've always retraced higher. And the main thing I always say is, what's the key factor driving the market? Interest rates are low, earnings are good still, and we should continue to go up. If we have some big event that will single out the market cycle, but eventually I think we recover. And looking at the Qs again, we're about 4 points off the all-time highs in the Qs. It's really not a big deal. The one market, if you are getting, if you are bearish and you really want something to short, I'm looking at the Russell 2000. Here we are on the 200-day moving average. So the IWM, that's about 136.5. And we're right on the support, right around 134. We broke prior support here at 139. So if you are looking for a bear play, something like the IWM to 134, I could totally justify that. But again, I wouldn't be looking to, go into the Qs and saying, hey, something like Apple, that's $4 off the all-time highs, or something like Facebook, that's, the earnings event was one thing, only a few dollars off the recent highs. These names still look very, very bullish to me. Netflix, you could play a quick scalp to a gap fill, but that's about it. I think we kind of grind higher. An option is always bonds, TLT, for a hedge against stock market crash, FXY, the yen as well. But I'm just not a huge fan of playing VIX products at this point, especially with the recent spike in volatility. So I hope it helps. Even the metals out there, we're running into some overhead here in GLD around 123. So if you are long, looking to start taking off hedges and possibly getting back into some rising stocks, something like an NVIDIA, 170 retracement, I think we get there very quickly as well. So hope it helps. Let me know, email, message, and everyone have a great week.